It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, June 2nd, 2015. Boy, oh boy, do we have a jam-packed newsletter in store for you guys and gals this evening. Going into Hump Day tomorrow, Wednesday's session. Before we jump into charts for tonight, though, I do want to remind you a couple things here. First of all, everything I'm going to cover tonight in our newsletter video, I teach to all of our students here at School of Trade. We have a great free trial. Head over to schooloftrade.com. Check out our free trial. I'll talk more about that at the end of the video today. Also, want to make sure you guys are aware to watch this video on our trading blog here at sidewaysmarkets.com. There are 3 reasons why it would be in your best interest to watch this video at Sideways Markets. First one, you can download all the charts for today. All the charts I'll be using in tonight's video, you can download those charts by following that link right below the video tonight. Second thing, upper left-hand corner, I have a free pass for all the guests who are not currently members of School of Trade, but would like to come out and test drive our live trade room. If you're not a member of School of Trade and you're wondering, what is all the commotion about, right? Who is this guy, JJ? What are we all about here at School of Trade? I'd love to give you a free pass. Come out and test drive our live trade room as a student for a day. And, of course, we have a nightly newsletter mailing list. Every evening, just before 8 p.m. Eastern Time, I'm going to send you an email, let you know when the newsletter is ready. That way you'll never have to worry about missing another newsletter report ever again. So make sure you grab your free pass. Make sure you register for our nightly newsletter mailing list. And if you grab the free pass or register for the mailing list, I'm going to send you a verification email. So please make sure you check your inbox and make sure you verify your email address for me. All right, guys, don't forget, all the charts are available for you below the video. Let's hop right in here. Starting out with the 6E, the Euro currency futures here this evening. Boy, huge. Not anything like we usually will see from the euro, right? Remember we talked about this last night. The euro, much like the S&P, I mean, this is a very liquid market. It's not going to give you those big runs like this very often, but you know, they're all the soap opera that is the Greek bailout plan continues. It does not disappoint us right now. It is definitely, the soap opera is on full swing right now. The final stages of negotiation before they put the stamp of approval or the stamp of default, right, for their creditors. So we keep listening into the news reports right now, and it's back and forth, back and forth. Today they're saying there was some sort of development there, and that caused it to spike up. Well, if you trade the chart, I don't trade the news, I trade the chart. It tends to be a lot more accurate. If you trade the chart, I see the euro is still bearish. And anybody who's watched my newsletter before probably can finish my sentence right now. Anyone can put together a one-day rally. Any market can put together a one-day rally. Can you hold on the pullback? That's the question. Okay, this goes all the way back to Wyckoff theory, right? One of our forefathers of westernized technical analysis, right? This is nothing more than the spike higher out of this range. There is very high likelihood now we pull back, and that's where the buyers are going to have to be. They're going to have to come in and respond on this pullback. So right now, we are not bullish. I know we made a big run today, but again, like I said, anybody can beat their chest and put together a one-day rally. But can you hold this? Right? When all the short sellers come in and the buyers now, when I see a big run up like this in the euro, I think about that poker table and the bulls. They've got all their chips in the center right now, and the only way to get them out, to put them back to work, is to take their profit. So we expect there to be some profit taking. We got the BMT, the 200 moving average, down at 1037. So that's going to definitely be a target right now. So even after today's grease-fueled rally, we expect this price to push back or pull back to the support levels below before trying to make its next push higher. So what we're expecting here is, and it may end up being a flag here a little bit, right? You got a little flag possibly setting up here right now. But bottom line right now is that this long-term trend is still down right now. I see no reason at all to call this a bullish market yet. Yes, it is short-term bullish, but way overbought. And again, I look at the 200 moving average down here, and I see a great target for us back at this 1037 area, back at the 1,000 area, right? Again, it'll most likely have to pull back here. take the chips off the table, and the buyers are going to have to make another push higher. Now, if I'm wrong and we keep on pushing higher, I will continue to look for selling opportunities at additional resistance levels overhead. For example, the 12.11, the 13.32, because at that point, it's just completely irrational. Now, given the market can remain irrational longer than I can remain solvent. So I will be looking for, I'm not going to blindly sell resistance if we take off to the upside. I'm going to wait for the buyers to try and fail, and then we'll sell this sucker right off those highs. So again, still calling this a bear market right now. Look for buyer failure at support to look for selling opportunities. And remember, if we end up down here in this area tomorrow morning, be very much aware that these bulls are going to have to respond here. If they can't, we're most likely going to tumble back inside this range. That's why I have target at the 1043, target at the, let's say, 1,000, and then target at the 099, the 0898. Those are going to be your best targets. Maybe we get a run all the way down to these lows, but I don't expect it, especially since, again, this is the euro we're talking about. My goal for tomorrow is to find some opportunities at support levels where the buyers try and fail. Sell right into their stops, and that'll be the easiest way to make your money on it. If you're a bull right now on the euro, I understand why you're a bull. You know, everyone's talking about Greece and everything. You know, jump up today. But be very careful. You've got to be patient waiting for that pullback. You've got to be really suspicious of these bulls at this area. And if I happen to be wrong, well, the market remains irrational, and I really got to play carefully during these irrational times. We're due for a pullback right now in the euro, and that's what I'm looking to get into here for tomorrow. How about the gold? The GC, the yellow metal. Now, guys, gold is going to be heavily affected as we go later on in this week. Gold will be heavily affected by Friday's non-farm payroll report. Okay, we get a big report on Friday, the first Friday of every 1 month. Unless the first day of the month is a Friday, you're going to get non-farm payrolls. So don't be surprised if what we're seeing right now continues for another 72 hours until we get through that 8:30 report on Friday morning. Not a lot. This is kind of the opposite of what we're seeing on the S&P right now. It really is. Gold, as you can see here, which makes perfect sense, by the way. Gold, as you can see here, is in a clear downtrend. We talked about selling these resistance areas in Thursday night's video. I told you last night that if you missed that sell off the high, you've really got to stay patient right now and wait for price to get up near these highs. The big thing we know right now is we're bearish. Second thing is triangle, wedge, consolidation, whatever you want to call it, and we are, bam, smack right in the middle of that range right now. So this is going to be the most difficult area to trade gold. What I'm looking to do right now is, as I said over here on the left-hand side, our plan is to keep selling resistance levels at the highs of the range and look to fade all bullish breakouts until something changes, right? Until something changes, we get a great short off that late last week's newsletter. We get a great opportunity here once again. I will be looking to sell these resistance areas overhead. So the word of the day right now, the word of the week, is most likely going to be fade those breakouts on gold. The closer we get to non-farm payrolls, the more concerned those longer-term traders and hedgers are going to be for gold, and you're going to see them get flat. You're not going to see a lot of new positions here as we go into non-farms. So the word of the week is fade. That means as the price is going higher, I'm looking for buyers to fail at the highs, or I'm looking for a reversal pattern, or I'm waiting for the turn and then selling waves down in. Just be very careful about trading right in the middle. And then, of course, sellers, if you can, leave a portion of it to run down to these sellers' targets. I've got easy seller targets, A, B, C, D. The problem, though, is the way it stands right now, you've got to be really conservative with your profit targets. I would be eyeing this trading range. I'd be eyeing the wedge levels. I'd be eyeing these swing levels, right? Those are going to be your money makers right now. The way it looks right now, and typically ahead of non-farm payrolls, you're just not going to get big home run moves right now on gold because there's too much at stake as of 8:30 a.m. on Friday. I was hoping we get another 24 hours without it slowing down like this, but hey, this is the way it goes sometimes here on the gold. There's a lot going on right now in the U.S. economy. People are wondering about rates here for the month of June, so we'll be listening in on Friday, of course, non-farm payrolls. S&P, let's keep moving. We go from the GC over here to the ES, the E-mini S&P futures. S&P is bullish in the long term and sideways in the short term. Now, I'm not going to say that we're not in that. You can see that bearish channel I drew out there. But you can also see, though, that line in the sand there at 2096 3/4. We haven't been able to make some lower lows yet. I'm not convinced yet that this is a short-term bearish trend. It's sideways as far as I'm concerned right now. I get a ton of emails over the last 24 hours saying, are you crazy? This is a bear. Look at the chart. I get it that it's been moving down the past couple days. I get that. But when I look at the line in the sand right now, I see triple bottom. I mean, it did poke its head out here, but, I mean, look what happened. It poked its head out here, and where'd it go? All the way back up to the range high. That goes to tell you, fake break of the low. Here's what this chart tells me right now. It tells me we have a long-term bullish trend, and this is not the only long-term chart you're going to see a bullish trend. We definitely know we're long-term bullish on the ES, right? That's the easy part. The hidden part here is let's just say I'm going to agree with you, bears, that there is a bear channel here. Okay, we call these untested channels because that low hasn't been tested yet, right? Well, look what happened when the price tried to move lower here. Undershoot, right? That's a tremendous undershoot of that low. Also, you mark up this as your range. That's a fake break of that low. So right now, we have a long-term bullish trend. We have a fake break of the low. What usually happens when we see a fake break of a low like this is it retests the high. Okay, that's typical of what happens. Then you throw on the undershoot of this bear channel, and what do we normally see when undershoot happens? An overshoot in the opposite direction, right? So that undershoot tells me we're most likely here going to try to run this thing higher. I might be wrong, obviously. This is the S&P we're talking about. We got a crazy world we live in right now. But statistically speaking, though, that's what happens. We undershoot the channel low. We fake break the low. Again, these bulls here are going to try to run this thing up to, and again, I've kind of got my eye on this as the range, and then a shorter term range inside of that range. We already tested that high there. And so now you've got to have your eyes on those resistance areas overhead for your next targets on the way higher here if you're an ES trader. So at what point do I change my tune? At what point do I change my tune? In my opinion, it's when we get below and stay below that line in the sand. If we break down, we should be able to hit that low of that channel. So if we can break and stay below that 96 3/4 for all you bears out there, right? We get a buy zone here. We get a buy zone there. Again, if we break below it, okay, then I'm with you on the bearishness on this market. But right now, all I have is a what if, right? Yeah, you're right. It could go lower. But right now, we don't have enough proof on that yet to go calling this a short-term bearish trend. So, bears, sell the highs, right? You can see there's opportunities here to sell these highs right now. So stay focused. If you're going to be a bear, whatever you do, don't sell these lows. Sell the highs, hold a portion to the lows, and then again, if we can break and stay below 96.75, that's when I'll start agreeing with you that we have a bearish market right now. But until then, the bulls right now, you guys are going to look for buying opportunities at support levels and take profit at resistance levels. And again, you've got plenty of targets waiting for you overhead right now. We have a broken channel here, so bulls ultimately are shooting for that 33, we'll say 34 area up top there. We'll see how tomorrow goes, but right now, got to err on the side of the bull side right now until we can stay below that 96 3/4. Now, if you disagree with me, I would love to hear your feedback. I'm JJ at School of Trade. Shoot me an email. Post me a comment below the video. I'm only giving you what I see on this chart. I would love to know what you think. I'm always open to new ideas and feedback. How about we wrap it up with the crude? Now, I talked about this last night. There's no reason why this price can't keep going higher. We get a clear overshoot of that low. Talked about it last night. Ain't no reason why we can't keep going up that 61.90, and it really is 61.90. It does look very close to that area right now. So let's take a look here at the black gold, the Texas T, the crude futures, CL. Crude oil remains bearish in the long term and bullish in the short term, right? So this is one of those environments where those, well, let's keep reading. We expected this price to keep pushing higher after the overshoot from last week. Check, got that. And the bulls have easy targets waiting overhead. I'm going to zoom in on this trading range in a moment, guys, and show you some more information on this. So hold on tight for that. Bears, you guys have the most difficult job right now. If you're a bear right now on crude, your best bet is to wait for these bulls to pull back to support levels and fail. So what you're looking for is, you're looking for the bulls to come out, try to buy it, and fail, right? You're looking for the bulls to come out, try to buy it, and fail. You're looking for the bulls to try and buy it and fail. Capiche? Deal? So bulls, you guys have the easy trades right now, right? You can easily see we're making higher highs, we're making lower lows. On the next chart, I'm going to show you where you can be buying if you're a bull right now. You've got some easy long-term targets, but as you can see, though, you're going to really run into some serious resistance here overhead around that 61.90, 62.29, right, so on and so forth. So be aware if you're a bull, okay, you can't be too aggressive. We got that 200 moving average down around 60.15. So again, bulls, buying those pullbacks on the way higher. Just don't buy the high. Buy on the pullback. And then bears, I got my eye on you, bears. We will be waiting patiently with our sell orders in hand, waiting for those bulls to try at support and fail. Try at support and fail. Remember, the easiest way to make money in a downtrend when the price is rising is to wait for that price to pull back to support, and then right where those stop losses start getting run, bingo, that's your chance to get short here on the crude. Let's wrap it up here with our faster time frame here on crude, since we have some more information to gather here on crude oil. Remember, we talked about this last night. There's that trading range. We have a bull bias. Again, no question about it. We definitely have a bull bias going into that trading range. You got your breakout pullback. Now again, continuing to move higher here, buying those pullbacks on the way higher here, 61.80, 62.25, and then possibly 63. That's a little bit of a stretch as far as I'm concerned right now. It's going to be a little bit irrational. Tomorrow is inventory day tomorrow, so keep in mind anything can happen on inventory day. But we definitely know, though, that we usually get some pretty darn big swings. So we will definitely keep an eye on these three key levels of resistance overhead here. And again, remember, don't forget, there's that overshoot resistance up there just below that 62 area. 61.90 was where we had that overshoot resistance area. If you're a bull, you've got the easy jobs right now. I'm continuing here to buy those pullbacks as we go higher. And then, of course, if you're a bear, this is where those support levels really come in handy, because now all of these support levels become easy places. If you're a bear right now on crude, they become easy places to look for the buyers, like I said before, right? Buyers try and fail. Buyers try and fail. So be on the lookout for a price to pull back, little bit of buying pressure, and then you know where their stops are going to be, right? Their stops will be right below that swing. So look for that to be a relative point of entry. You know me, if you're a student in my trade room, we are always looking for failure patterns, because they oftentimes give you the fastest paycheck, because you're literally selling right into those buyer stops. You're making those bulls sell their way out of their open positions. So bears use support levels for opportunities for entry and for targets. If you're a bull, use those support levels for opportunities, for buying opportunities. And guys, don't forget on this, you're not alone out there on crude or any of these markets tomorrow. I know you might be alone at your computer right now, but you're never alone in your trading career. And I want to thank you guys so much for stopping in, checking out the newsletter tonight. I want to remind you guys, if you have some free time here, head over to schooloftrade.com, check out our free trial. You're going to learn more with me in 1 week on my trial than you will anywhere else on these interwebs. There's a lot of junk on the internet these days, right? And I know I am definitely not one of them. So I want to make sure you guys join that free trial. Also want to make sure you guys get more information about beginner, intermediate, and advanced levels of membership. We have a home for every single type of trader, whether you're a brand new trader, just getting your new career started, or if you're an experienced trader that's just been trying to find an edge in these chaotic markets these days. Guys, I got someone standing by 24/7, 365 to give you guys and gals a hand if you need me. Shall we do it again? Same time, same place. I'm going to have a new strategy for you guys, or a new plan for tomorrow as well. So same time, same place again tomorrow. Don't forget, I open up my live trade room at 8 a.m. Eastern time. And as we said, don't forget tomorrow's inventories, 10:15 to 10:45 tomorrow on crude. What was that again? 10:15 to 10:45 tomorrow morning on crude. Sitting on those hands. And then I'll be with you tomorrow in my trade room, and we'll navigate through that inventory report. Also, careful on gold. It clearly is reacting to this non-farm payroll report later on this week. My name is Joseph. I'll see you guys tomorrow morning, 8 a.m. Eastern time. If not, same time, same place, 8 p.m. Eastern time tomorrow evening. Have a great hump day. Adios, amigos. Bye-bye for now.